Hello everyone. Let's look at the 4 open positions and set a risk-free target. There are 2 ways: set a break-even point or use a trailing stop. I made a video to show how to use this method for futures trades. You'll see how changes in your account balance can make a difference. Often, instead of getting stopped out, you break even or make a small profit. Now, let's check our trades again. I'll refresh this, and the market has pumped up, so it's a perfect time to go in. Learn to use this method for your futures trades. You will see the change in your balance every time you trade. Most of the time, instead of taking a loss, you will break even or come out of the trade with a small profit. These small changes will cause you to see big changes in your balance after a while. Let's go see our open trades here. I'll refresh it. The market is pumped right now, and it's exactly a good time to go. Let's look at this together. Now, we have 4 open trades. The first one is Bitcoin. There was a penny of Bitcoin in this trade, and a penny in profit. This was our entry point. This green line that we see is 1,000. We entered the trade. Now 104, when you enter a trade, you put a stub target for it as soon as you enter. Well, I'll come with you now and put a stub target. I'll tell you what to do when you first enter and you're in profit. We want a stub target. Leave this position. In the middle. Here it says full position TP. Click here. It will open for you. And say that the entry price for the transaction was 100,000. The current market price is 100,000. According to the video that I said in the media risk and capital, I will put the entire Surf Quinch tutorial in the video caption. According to this, you have come to a stable. For example, stable has become a flop. And Puns said that if your stable loses, you will lose, for example, $1,700. What is the target? The target is 107.689. For example, if it says that if you hit the target, you can make a profit of 10.000. I say okay, confirm. He added it on the chart for me. You see this red line? And the second green line he put in are the targets that he added for me. If you take it like this, you can move it around, and now we want to do this. Exactly. What do we want to do? After we open the trade here, for example, you made a profit, right? Once you made a profit, you take this stock and put it at the break-even point, a little higher, for what? So that your profit is covered. Now, considering the volume that we are trading, when I give you $150,000 in a trade, I give you $86,000 to $86,000. That's why you give it a little higher. So now, here's a look. You can calculate exactly how much higher it will go on your own calculator. That's the first step. So this is the first step you need to take. You have crossed the stub target. After you have entered the profit, you have to take a little more than one. For example, you take 2 to 3% of the profit you made. You put this in the break-even point. What if it comes back? At least the deal is closed at break-even, meaning you haven't paid any wages or anything. Why? Because if it comes back from here, the probability of it hitting your stop is much higher than if it hits your target. It's closer to that. We always have to be more profitable somewhere. We know that. The appointment starts from there, meaning I entered here, and it started climbing from there. But if I make a mistake, for example, here, when a stream came down, it started to go down. I would prefer it to go straight up so that it would be used and not lost, right? So this is it. I have another open trade, and this one is for the first scenario. I have 4 more trades, but when you click on Ethereum, it shows 4 different options. Ethereum has pumped up right now, and this is for the second type of target setting. I entered here, and it's currently at 301,400 in profit. Now, for the stop target you want to set, the first type I mentioned is for when you anticipate that the market is going to make some really volatile moves either up or down. If you're shorting, you'd use a trailing stop. What does a trailing stop do? Let me show you on the chart. This is the stop target you want to set for the first type I mentioned, which is for when you anticipate that the market is going to make some really volatile moves either up or down. Now, if you're shorting, you'd use a trailing stop. What does a trailing stop do? Let me show you on the chart. Let me first draw the chart here, so you can see. This is your chart, so the price is going up like this. You came here, you entered a trade. For example, this is our entry into the trade. Well, I said, after this amount of profit, how much does it mean? For example, I said 3% went into profit. 3% went into profit. By a margin of 1%. It should follow the highest points we set, meaning if the price reaches here, it should place our stop here. If the price reaches this point, it should place our stop here. So, as the price keeps going up, our stop automatically moves behind it. They're just moving together. Let's show this on 4 units. Now, let's clear these out. Let's say you came in here and entered the trade. I'm saying that after we go into profit by, say, 3%, which means we reach this point. After we hit that 3% profit, it would be at this red line. Let's clean this up. Suppose you came here and traded fruit. Well, I'd say after we went up by, for instance, approximately 3%, we got to this point. After we reached 3% profit. In this scenario, for example, this red line would be. Let me start with another color, because I want to use red for the stop. Start with blue. Put my stop at a distance of 1%. My stop is shown in red. What is this distance? Is it 1%? A little higher. Well, now this is starting to happen. The price is going up. Here comes this stuff. Here comes the price. The stuff is going up. The price is going up. The stuff is going up. Now the stub hasn't been hit anymore because the price has reached here. It hasn't gone here yet. Now that the price has reached here, my stub is coming here. What's the point of this? It has an advantage. The advantage is that if the price starts like this big candle that has just formed in the market, it starts like this, whatever goes up, my stub will follow it. If it turns around, my stop will be in profit, more than at break even. If it turns here, I've made this profit. We had 2 scenarios: place stop at break even after entry, or activate trailing stop for volatility. I've taught you the method. Let's do it again. Activate trailing stop. It follows price. Tutorial is in video caption and website. Check free training section. After you enter, set stop to break even. If volatile, activate the trailing stop. I've taught you. Let's do it again. Activate the trailing stop. It follows the price. Where's the tutorial? In the video caption and on the website for free. Check the free training section. I've gathered all videos, bonuses, targets, withdrawals, and more. It's important, covers risk, investment, and a 50-minute tutorial on using the trading app. I'm putting the free robot on the website so you can come to the free training section here. I watched all his videos, from getting his bonus to depositing target stop. And I don't know. This is very important. No risk, no capital, and even 50 minutes of training on how to use the phone. The Akengar phone app. In this part where I talked about setting targets and stops, I also explained trailing stops. Let's take a look at that, but now we're going to go through some examples. When you use trailing stops, it can really help. There's a point where you might hit your stop at break even, and then there's a point where you could take a little profit, but you might end up making a lot more. Why? Because this candle here might be influenced by some news or something behind it. If it keeps going up, let's say the date was right here, and I said it would hit here. And if it keeps going up like this, let's say the date was right here when I mentioned it. So how much are we in profit right now? Like 6,400 and something? We were supposed to make 7,000, but if it follows the price, instead of 7,000, you could end up making 10,000. It's clear which person wouldn't choose that. That's the advantage this whole thing has for you. We click on Ethereum and go to set a trail. You will see here it says trailing TP-SLL. You can also level it from here. You can also set a trailing TP-SLL on this. It will say how many numbers it will say. It will say that the information is written here. It says that the price is now 3.320. Your entry was 3.100. And that's it. It asks for your desired trailing price. At what number should Ethereum activate? This is the blue line, inactive initially. What number did it reach? Activate it now at 3,325. Activate it. My bid rises more than 2.5, so it goes up to 26. Activate it. It explains the callback rate, the distance from the blue line to the red one. It asks for the percentage difference to follow. I want it at 3.5%. Well, your fear is going up. Your fear is going up. 26. Activate the callback rate for me. It explains the maintenance method, but the callback rate is the same distance from this blue line to the red line. The one that follows it says how many percent difference. Should I follow it? Here we have to give a percentage back. I say, what percent? Should I follow it? I say, let me see it on the chart. I want it to follow like this. 3.5%. With a 3.5% drop, he asks how much of the Ethereum should I sell. If the price comes up, should I sell the whole thing or just a piece? This is a lot, it's gone too far. This is what makes me work with the coin, but usually the whole thing. Well, now I want to sell the whole thing in this situation. Okay, I confirm. I confirm. He threw it at me. It was over and gone. Now you can see on the chart that the trailing TPSL is starting to work. The TPSL is working for me, but the price hasn't reached it yet. It's on Ethereum, quantity 1. Orders also come to this section. Orders come to the take profit stop loss section. You can see, I said, at 3 and, but it became 3 and 326. Turn it over. Well, this became 27. Turn it over. Now it's trailing like this. It doesn't care anymore. It doesn't need me to be on the chart. Okay, I wanted to show you this. So there are 2 ways. One way is that I showed you Bitcoin. Click here. On Bitcoin, raise your stop loss to break even once in profit. If the price reverses, you're safe. Since it's risen, trail it higher. In orders, cancel take profit, cancel stop and target, then trail, or remove stop, keep target. If target is good, leave it and trail. If it hits, great. If it falls, trail activates. Choose, predict rise and set trailing stop, or if peaked, close trade instead of risking loss. Bring stop to break even. Now you can go to the orders take profit section and cancel these. From here, you can also click on these buttons here. Cancel the stop, cancel the target, and start the trail. There is another thing that can be done. Just delete the stop and leave the target. Maybe it will reach the target sooner. If you think your target is in the right place, set the target and activate the trail. If it goes to the target, it will hit the target. If it goes back, it will hit the target. The trailing is set, but usually you choose one of these 2 options. Either you predict that the market might move up, so you set a trailing stop for it. Or if you think it's reached its peak, then you just close the whole trade right there. Just remember, instead of placing the stop down low where you might take a small loss, bring it to break even for your trade. That's it, it's done. Check the caption and see the link. I'm putting these exchanges here. I'm posting a view free tutorial on this page, so sit back and watch. I'm going to use it. Hey,